Welcome everyone to what is probably our last lecture in this semester in the introduction to banking, and in this last section, this last chapter of our introduction, we'll be talking about the special characteristics, some special features of foreign banking systems. We've talked about the German banking system at the very start, and now we want to talk a little bit about the specifics of banking sectors, especially in the US, the UK, and a little bit in Japan. Why? Because these three are basically the most important ones in the world. Of course, we could have also spoken a little bit about the European banking system. Maybe that's something for the future. But we have to talk about the US banking sector because it is the largest and thus most important banking sector in the world. The UK, because the UK is a little bit different from the rest of the European Union and Europe, and Japan, because Japan is a large industrialized country with a very special banking sector, and it's quite interesting to have a look at the Japanese banking system. Now, we start with the US banking sector, and it is interesting to see that the development and the evolution of the US banking sector has closely followed the general political development in the US. So, for example, here you can see that in 1791, the first Bank of the United States was established. And this actually was the first attempt to establish a central bank, and it also failed due to the resistance of other banks. Now, why is this? Normally, we would think that any country, especially one that is newly founded, like the US in 1776, that any country would consider it natural to have a central bank. This is not so true with the United States, because and we can see the results of this struggle, this eternal struggle in the US still today. The United States have always been characterized by the constant struggle between centralist elements and federal elements on the one side, and Republicans, nowadays Republicans on the other side, libertarian ideals, and people who thought that power should be decentralized, that power should be given to the states and not to the United States, aka the federal government. And especially at the very start of the United States, a central bank, a federal central bank for all states, was considered to be something contrary to the ideas of the Revolutionary War and the Revolution, because it would again give central government. Before it was the king, now it's the federal government. It would give central government too much power. So the first attempt failed. Then in 1816, the second attempt also failed due to resistance from other banks. And in 1863, the National Bank Act established national banks, and it established the Office of the Comptroller of the Currency, the OCC. We also saw the introduction of a national bank note, the greenback, and it also introduced the minimum reserve. Same with actually the dollar bills, the dollar banknotes we know today. It took a long time for the US to introduce not just a unified currency, the US dollar, but actually to introduce standardized banknotes. Up until 1863, banks could each issue dollar notes, leading to a variety and a whole universe of different US banknotes, leading to the problem that if you paid attention to the date, 1863, actually, the Confederate States during the Civil War tried to destabilize the Union economy by counterfeiting US dollar notes. The Confederate States had their own dollar, they had the Confederate dollar, and the Confederate States, the Southern states, tried to destabilize the Union, Northern states, by counterfeiting US dollars, and that's when the federal government realized it had to introduce national banknotes in order to prevent counterfeit money. Ja? In German, die Südstaaten haben einfach so viel Geld gefälscht, dass die einzelnen Dollarbanknoten der einzelnen National Banks, die sowieso schon nicht voneinander unterscheidbar waren, natürlich noch einfacher zu fälschen waren. Und deswegen hat man dann den heutigen grünen Dollar, the Greenback, eingeführt. In 1913, we saw the Federal Reserve Act and thus the successful foundation of the nowadays still in existence central bank system, which is the Federal Reserve System, or simply the Fed. We've already seen the Federal Reserve System consists of the Federal Reserve Board and all the different Federal Reserve banks in the federal circuits. So for example, you have the Federal Reserve Bank of New York, the Federal Reserve Bank of Chicago, and so on. And all the governors, they meet in the Federal Reserve Board, and the Federal Reserve Board is responsible for monetary policy in the US. Now, in the 18th and 19th centuries, there were numerous unregulated banks without a common currency. Each bank issued its own banknotes, so we had a high counterfeit and inflation rate. The National Bank Act of 1863 not only saw the OCC, which is an agency of the US Treasury Department headed by the auditor to regulate national banks. And we already saw the distinction, I think, between national banks and state banks. National banks are privately owned, but they are chartered by the OCC. So they're given the license and the authorization to operate by the Office of the Controller of the Currency. This is the famous dual banking system of national and state banks, and also the dual banking system, meaning that all banks are regulated and supervised by two authorities, usually one at the state level and one at the national, federal level. National banknotes. Only central banks were allowed to issue national banknotes, which, apart from the bank name, had a standardized design. And later on, we saw the greenback being issued by the Federal Mint and by the Federal Reserve. We also saw minimum reserves being introduced. National banks had to maintain minimum reserves to secure the debits of the account holders. Disadvantage was like a pyramid-like reserve, so small banks stored at larger banks, which in turn stored at commercial banks, and so on. Not without problems. So after or shortly before the First World War, we had the Federal Reserve Act that introduced the Fed, created these 12 Federal Reserve districts for faster check collection, check clearing system. Same with the central banks, for example, in the German imperial age and later on with Deutsche Bundesbank. The central bank also in these times also acted as a major financial hub for the banking system, for the private banks, so that banks could route money transfers via the central bank. And in 1913 we saw the inflexible national banknotes being replaced by Federal Reserve banknotes, and that's the Federal Reserve Act of 1913. As a result of the Great Depression, we later saw the Banking Act of 1933. So we had a prohibition for banks to interest on demand deposits, to sign securities, join organizations trading in them. We saw increasing capital requirements. Most importantly, we saw, as a reaction to the Great Depression, that banks were prohibited from engaging in commercial and investment banking at the same time. And we saw the establishment of the Federal Deposit Insurance Corporation. Why? Because many banks defaulted, and because these banks defaulted, depositors lost their deposits and lost their money. So the Federal Deposit Insurance Corporation was founded, the FDIC, not only to supervise banks, but also to act as a deposit insurance scheme. And since 1980, we've seen increased competition. We've seen the Dodd-Frank Act, the Gramm-Leach-Bliley Act, and so on. That, well, as you can see here, the Gramm-Leach-Bliley Act, the GLBA, it deregulated the financial sector, it deregulated banking, and was in part repealed later on by the Dodd-Frank Act after the great financial crisis. And these have these were some recent developments in the US banking system. Now let's turn to the structure of the banking and financial system in the US. We've seen that in Germany we have three pillars: savings and loan associations, government-owned banks, unions, Genossenschaften, and private commercial banks. In the US we have depositories, which use deposits as their main source of financing. So these are credit banks, savings banks, cooperative banks or credit unions or mutual banks. We also have institutions for contractual reserves. So these are insurance companies and pension funds, and also investment intermediaries, investment funds, investment banks, securities trading companies. Now those credit banks, they are the main provider of loans to households, businesses, most important financial intermediaries in the US economy. They're usually publicly, many typos here actually, publicly listed or privately owned, mostly public limited companies. We have some foreign banks, like for example Deutsche Bank, but they have only entered the US market in the last couple of decades. We have savings banks. They are similar to credit banks, but the main difference is the joint ownership of account holders and borrowers. And last but not least, cooperative banks, mutual banks or credit unions. They are non-profit organizations, just like our credit unions. That is, members' deposits are used for credit offers to other members. So you have to be a member of your cooperative bank to become a customer and to get a loan, and focuses of course on retail financial services. Now insurance companies and pension funds are, I guess, not that important because they are important for the sector, but they are not so much different from insurance companies or pension funds in Germany or in the European Union, with one exception. You have to keep in mind that for insurance companies, regulation only takes place at the state level. We almost have no federal supervision and regulation of insurance companies. It's all done at the state level. And what is even more interesting is that for insurance companies, you will see some products being allowed that are not allowed, for example, in Germany. So you might find some life insurance policies that are only offered in the United States and which are forbidden by, for example, a German regulator, BaFin, or supervisor BaFin. Same with investment funds and investment banks. What is interesting is that investment banks, of course, in the US are extremely large, extremely profitable, and I think the world's most important investment banks, they are all US. Okay. Now the US payment system, I guess it is not that important, but in the US you have two payment systems, FedWire and CHIPS. FedWire is owned and operated by the Federal Reserve Banks, real-time gross booking system that allows participants to make final payments in central bank money, and the clearinghouse interbank payment system. Just that you have heard these two names, I think this is not that important. Same with actually the retail payments. And what is more interesting is, I guess, regulation and supervision of banks in the US system. Let's start with the Office of the Comptroller of the Currency, the OCC. It regulates all national banks. For example, it issues approvals of applications for changes in the business, banking structure, new licenses, branches. This needs to be done by the OCC. Can also take action against banks that do not comply with rules. It monitors branches and agencies of foreign banks, and of course the objectives are ensuring the safety and solidity of the national banking system, also promoting competition and ensuring equal access to financial services. The Fed is also a regulator. It's not just a central bank, but just like, for example, Bundesbank is also a supervisor. The Federal Reserve Bank is also a supervisory authority. Actually, the Federal Reserve System, the Fed, is the central bank. It is also responsible for the largest, most complex bank banks. I told you it consists of the 12 Federal Reserve banks and the Federal Reserve Board. And what are the tasks? Monitoring and regulating banks and maintaining financial stability, operating monetary and credit policy. The FDIC is also not just a deposit insurance scheme, but it's also a regulator and supervisor. It monitors, supervises and regulates approved banks that are not members of the Fed. This is meant by the dual banking system. Private banks can be a member of the Federal Reserve System, then they are regulated by the Fed. If they are not a member of the Fed, they need to be supervised by the Federal Deposit Insurance Corporation. So national banks, officially approved member banks of the Fed, must belong to the FDIC. Credit banks and saving banks are exempted from the membership requirement, and it's an independent federal agency that's financed by premiums from FDIC insured institutions. And you will see this in the shop windows of those banks. They will have a logo, a member of the FDIC or FDIC insured, to signal to customers that deposits are safe. Okay. Now then, let's turn to the banking system in the United Kingdom. Now, compared to other large European countries, the banking sector in the UK is relatively consolidated. There's relatively few banks, large banks, however, and just like as in Germany or in the European Union, the number of total number of banks has decreased as a result of banks merging and being bought up and being sold to larger conglomerates. Now, foreign banks hardly conduct any pound transactions, but they are usually focused on investment banking activities in the City of London. And investment banking is an essential feature. We've already seen what it includes: corporate finance, mergers and acquisitions, trading, etc. Investment banking is dominated, in London at least, by US and European banks. We have Goldman Sachs, Morgan Stanley, Lehman Brothers, now defunct, Deutsche Bank, UBS and Credit Suisse. Largest UK bank subsidiaries in investment banking. They have subsidiaries in investment banking in London, but there are a few independent commercial banks. So what are the major British banking groups? You probably have heard of some of these companies. Now, Northern Rock, actually we have to cross this out, same with Lehman Brothers. Abbey, Alliance and Leicester. Barclays is a huge banking group. Bradford and Bingley, and actually Arbos and HBOS. HBOS is the Halifax Bank of Scotland, Arbos, the Royal Bank of Scotland, Lloyds, and if you've probably heard about HSBC. HSBC stands for Hong Kong Singapore Banking Corporation, but it's a huge UK-based bank. So I guess Barclays, HSBC, those are the two banks that you probably heard about and actually that are also active in Germany. And that's actually the structure. Very few, very, very large private banking corporations. You don't have savings and almost no savings and loan associations, a few mutual banks and credit unions, but the market is dominated when it comes to retail and commercial banking. It's dominated by large banks, and of course you have all major international investment banks in the City of London. Now, payment system, I guess that's not so interesting. We can skip this. You can see payment transactions over the last couple of years up until 2003. I guess not that important. What is interesting is that the UK, this is actually not on the slide, the UK has been much more flexible when it comes to Bitcoin, when it comes to Apple Pay, when it comes to Alibaba Pay, Alipay. I guess a couple of years ago, well before the Corona crisis pushed contactless pay, the ability to pay with even sometimes Bitcoin and to pay with mobile wallets was introduced much earlier in UK shops, in retail shops, than it was in Germany at least. So this is also due to slightly different regulation and I guess to this particular structure of the banking system where you can see private bankings and private banks dominating the market and these companies trying to compete with the big tech companies. Now let's turn to the regulatory environment. Well, let's say before Brexit. We've seen many changes. As you can see, for example, here in 2001, we saw the FSA, the Financial Services Authority, as a non-governmental organization that bore the regulatory responsibility. And in 2013 was divided into the Financial Conduct, the FCA Authority, and the Prudential Regulation Authority. Those are the two authorities and agencies that conduct financial supervision. FCA is a company with a limited liability on the guaranteed deposit, which acts independently of the government. It regulates products and services of financial companies, financed by the subscription fees of the companies that are regulated. Very similar actually to German BaFin, although BaFin is a state and government organization, but BaFin is actually financed by the fees that banks need to pay to BaFin. Has the authority to regulate the marketing of financial products, minimum product requirements, may prohibit financial products, something that was also an authority that was also given to German BaFin a couple of years ago, and revoke or change promotions if it finds them to be misleading. And the Prudential Regulation Authority, also a limited liability company owned by the Bank of England, and it's responsible for the supervisory regulation and supervision of banks, building societies, cooperative banks, insurers and investments. So it's all under the authority of the Prudential Regulation Authority. And of course, promoting financial stability is one of its major goals. So assesses whether financial firms are safe and sound, whether they fulfill certain requirements, assesses not only current company risk but also possible risk and intervenes as soon as possible, and it's focused on the stability of the financial system. Okay, there's also one typo here. I have to mark it. Okay, so now last but not least, let's turn to the banking system in Japan. In Japan we have private deposit institutions, private non-deposit institutions, and public credit institutions. Now actually we have some, this is, well, let me start again. This is somewhat tricky to translate these words from Japanese into English. For example, Citibanks is not Citibank Corporation, but these are banks that only operate in one city. So we have some banks, city banks, we have some regional banks, secondary regional banks, long-term credit banks, and large groups, and also foreign banks which operate in Japan, like for example Deutsche Bank, Citigroup, and large investment banks. We also have private non-deposit institutions, those are the investment banks, and public credit institutions. So for example, Citibanks, they're actually the largest banks in the Japanese banking system. They account for approximately 50% of the total assets in the banking sector. These are credit banks. They offer all banking services, and they are mostly focused on large companies and run retail banking businesses in urban areas. Now, most of Japan is urban, but still they operate in the large cities. So for example, in 2005, a long time ago, they had around 2,500 branches. Regional banks with more than 7,000 branches, they have a greater geographical presence, not just in one city, but throughout the country, focuses on retail services and lending to small and medium-sized companies. And secondary regional banks are smaller with the same functions. So they are maybe sometimes focused to only certain regions. Now, this could then be a secondary regional banks. Group banks carry out credit banking activities. Main function is asset management for retailers, other companies, and they also offer a range of investment services, and long-term credit banks. They offer medium and long-term finance just in the corporate sector. Cooperative banks are same as in other countries, mainly carry out retail banking, small, medium-sized companies, and they compete with regional banks and city banks, most notably. Small but numerous. And then we have the investment banks, insurance companies, securities trading firms, and these are non-deposit institutions. So we also have public sector banks. Most important institutions, for example, the Japanese Post Office. Same with Germany a long time ago when Postbank was a public bank, one of the largest banks in Germany. Japanese Post Office operates it used to operate almost 24,000 branches, and you have postal savings deposits. As you can see, it used to be 23% of total bank deposits, so a huge player in the Japanese banking system. And in 2007, parts of the postal services were privatized, but it's still public. And you have some other public institutions, just like, for example, you also have the KfW in Germany. Okay, payment systems. I think we can skip this again. This is not too interesting because we need to have certain payment systems and clearing systems just for Japan. As you can see, Japan has a pretty simple structure in contrast to the US system. When it comes to central banking, you have the Bank of Japan, the BOJ. The BOJ is the central bank. It's not a system of many central banks that form one group, but it's just the Bank of Japan. Here actually one thing that is striking, and that is still striking, one would think that Japan, being always characterized as a high-tech company, with everyone being in love with new technology, Japan, for being a country that is very open to new technologies, is extremely averse to cashless payments. Might have changed now during COVID, but actually when you go to Japan, you need cash because public safety is not a problem, and you have even less chance of being robbed than, for example, in Germany. Everyone carries around a huge amount of cash and everyone pays in cash. So don't expect to be able to use a credit card in Japan. And as you can see here, in 2009, we had an enormous percentage cash ratio of GDP, meaning that almost everything is being paid in cash, and check and debit card payments are insignificant. At least they were before the COVID crisis. So you need to use cash in Japan. Same here, the card-based payments to private final consumption expenditures. Well, this is where Japan is. Only credit cards. No one uses debit cards. At least no one used to use debit cards. And this is completely different already in Korea. You can see everyone pays cashless in Korea. Same here in this payment. This is just for Japan. Okay. Banking crisis in Japan. Why are we interested in Japan in the first place? Well, it's a huge industrialized country. It is one of the main players in the world. Problem is, Japan has been in a recession or near recession or stagnation for the last, I guess, 20, 25, 30 years. And a banking sector has been partly responsible for this. So there were some major events in the Japanese banking system that led to several crises. For example, mid-1995, we saw two large credit cooperatives and a regional bank go bankrupt as a result of bad loans. 95, housing banks went bankrupt. They were rescued by a number of banks and state funds. And as a result, bank share prices fell relative to other securities. In 97, Sanyo Securities is in arrears on the credit market. Hokkaido Takushoku Bank and Yamaichi Securities go bankrupt. So every now and then we saw large financial companies go bankrupt. Well, 98, the Japanese government tried to manage undercapitalization of banks by raising capital requirements for the banking sector. And they passed several reform laws, including the Financial Revitalization Act, which deals with insolvent credit institutions. And 2 large banks were nationalized. The Financial Supervisory Agency was established, and it transferred responsibility for financial supervision from the Ministry of Finance to an independent agency. It was renamed the Financial Services Agency. One has to be careful about these names because actually we do have English names for these institutions, but of course the original ones are in Japanese, so the Japanese words are completely different from that. Now, the bank collapse in the 90s, when we saw many large and a huge number of small Japanese banks go bankrupt, was a result of 3 main factors, I guess. Same actually as in the financial crisis of 2007, 2008, 2009. First, we saw excessive lending. We saw lending increasing rapidly towards the end of the 1980s, and as a result of the fall in share prices, the economic downturn, and the fall of the housing prices, many highly indebted companies were unable to repay their loans. We saw bad loans, non-performing loans increasing, and actually the increase in bad loans led to the systemic crisis in 97-98. We had a negative impact of asset price deflation, sharp rise in interest rates, same as in the great financial crisis, introduction of various credit limits on real estate activities. You might have heard that in the 90s, Japan had a huge housing bubble when you could hear stories like one apartment, or actually one area in Tokyo costs more than the whole state of California. We had a huge housing bubble, and when the bubble burst, this resulted in significant losses for companies, but also to banks, because they had given out mortgage loans that were now worthless. They used the real estate as collateral, and this in turn led to the conversion of bank loans into unprofitable assets, asset price deflation. So again, you can see the similarities between the Japanese banking crisis of the late 90s and the great financial crisis 10 years later. Excessive lending, bad loans, a housing bubble, increase in interest rate, bubble bursts, banks go bankrupt. And then, of course, you have a failure of politicians to solve the problem. So the initial approach was to stimulate demand through fiscal policy. Didn't work. Problem is, in Japan, they are now, I guess, in the 3rd decade of trying to solve these problems. The Japanese government, the Bank of Japan, and the Japanese governments that came after the 1990s, they all have tried to use monetary policy to restore faith in the banking sector, to stimulate growth, and it doesn't really work. The previous government, you might probably know that we now have a new government in Japan. The previous government by Shinzo Abe tried a famous policy called Abenomics to use extensive amounts of money from the Bank of Japan to stimulate economic growth. Didn't really work, and now with the COVID crisis, I'm pretty sure this fiscal expansion, monetary expansion, will not work either. So, new bank restructuring reforms, remediation of various banks, which were worth about 9 trillion yen, faster recognition of bad loans, stricter rules regarding credit classification, value adjustment of loans, sales of rotten loans of nearly 90 trillion yen since 98, and they've tried a lot. the Japanese banking crisis was never really fully resolved. And this is one problem still today, that a lot of these banks are actually zombie banks. Regulation, Bank of Japan. It's Japan's central bank, governed the banking system until the end of the 1990s, involved in the introduction of the universal banking model, was deregulated at the end of the 90s, so it allowed the establishment of financial holding companies, removed many barriers between banks and other financial services, liberalized stock brokerage fees, allowed banks to sell investment fund products. It got greater independence from government with regard to monetary policy, but we have to see that the Bank of Japan is more closely connected to the Japanese government than, for example, Deutsche Bundesbank was before, and the European Central Bank was or is. So you can see that politicians in the Japanese government can usually influence monetary policy by the Bank of Japan much stronger or much more strongly than in Germany or the European Union. And now with the Financial Supervisory Agency, so public banks remained under the supervision of the Bank of Japan, but the private banks are supervised by the FSA. Financial Services Agency, state agency responsible for the monitoring and supervision. Actually, you see, this is the problem. I think I need to look up the Japanese names for these agencies. I think this is the same one. It's a slightly different translation. So, Financial Services Agency, responsible for monitoring, supervising all private banks. And I guess you can imagine what the standard instrumentarium and the standard goals of the FSA are: supervise and regulate private banks in Japan. Okay. Now this concludes the lecture. I hope I've given you a good first taste of why banks are important, what makes banks so special. I hope you have some idea of the German banking system, a few ideas about the US, UK and Japanese banking system. You've seen the most important points in which banks differ from industrial companies: financial regulation, supervision, different accounting rules, and usually financial stability, impact on the real economy via its lending channel, and payment services, and providing customers with deposit accounts, financial services, payment services. And because of these very special services to customers, banks have a systemic relevance, and that's why they are regulated and why we have such an introduction to banking here. So I hope you enjoyed the lecture, at least a little bit. I will now stop the recording and you can ask some remaining questions afterwards. Thank you.